Welcome back to the BestProp4U video, and today we're going to look at gold. Gold prices have been highly volatile, I would say, today, trimming earlier losses to hover around the flat line near 4,450 or so. The driver, well, a major tug-of-war between geopolitics and US economic data. On one side, reports emerged that the US and Iran reached the 60-day memorandum of understanding for a ceasefire in the Middle East, which of course eased the safe haven demand that usually supports gold. However, the US dollar also surged towards 7-week highs today because Fed officials continue to warn that inflation, which is fueled partially, of course, by energy disruption in the Strait of Hormuz, remains too high. And the market is pricing out near-term rate cuts and actually pricing in hikes by the end of the year. As we know, a strong dollar usually means a weak gold price. So let's see how this translates to the charts. On the daily, gold aggressively bounced off the 23.6 Fibonacci, or bouncing, I would say, retracement level, which increases the chances of a larger consolidation pattern forming here, perhaps a pennant. We're going to find out if that were the case, and if that becomes bullish, 78.6 would be potentially, and 61.8 the next targets in the medium term, that is. However, the broader bias remains strictly to the downside. Okay, we are facing strong resistance at the daily median Bollinger Band, which is around 4,600. But more importantly, the price is below the median line, okay, as well as the RSI 50 level, currently near 40, I would say, and the Bollinger Bands are tilting downwards. You see all of them, actually lines tilting downwards. So any move up right now could simply be a lower high that leads to further declines, potentially opening the door all the way down to 4,100, assuming, of course, we do this time break the 23.6 Fibo, or, well, actually break the 4,390, let's say, support. That was a record high back in October, last October, that is. As always, of course, dropping down to the 4-hour chart. This is where we get perspective. What we'll do here is we see some sort of RSI divergence, right? Hidden bullish divergence, because you've got extreme price divergence with momentum. Okay, momentum looks flat, but price is diverging big time. So this suggests that current short-term bounds might have a little more wiggle room to run. But the key test for me is the 4,500. Again, the middle of the Bollinger Bands. Okay. Now, if gold fails to cross 4,500, we could see a rejection. Okay. And see prices moving lower down. So a logical thing to do here is pull out that support level that we've had back in the beginning of May, which comes exactly at that level as well. Okay, and also for those who haven't spotted yet, we are also in a post double top formation environment. Okay, sort of, you know, in a downtrend. So if we consider the measure move as a target here, essentially we could be heading down towards the 4,300 level. Okay, assuming this is going to respect the target, but because we have actually re-entered that territory of the double top pattern here, maybe we should really consider it as an actual per se target. Now, if price action rejects that double top, the measure projection from the neckline would be at 4,310. This zone is critical previous support from May as well. See, over here. Actually, March, excuse me. If we manage to break below, above 4,500 on the other hand, we look towards the top of the band, which is at 4,600 or so. Obviously, we're going to have to also face the 4,590 or so, which is an important level to take into consideration. And that's why I'm going to drop another line over here. So these are the levels to pay attention to. Now, if we manage to break above that level, obviously we'll look towards 4,600, and that will invalidate the immediate bearish setup. With next leg up to 4,670 baht, make no mistake, as long as below the 50 and 30.2, the bias is to the downside. So what does the 1 hour say? The 1 hour chart, things are incredibly volatile. The recent 1 hour candle spiked all the way from 4,420 to 4,480, retesting the upper Bollinger Band pretty much. Both the upper and lower bands are actually expanding, which is a signal of high volatility that might be here to stay in the short term. So I wouldn't be surprised to see a quick stop hunt move up to take out the 4,500 level. I wouldn't be surprised. Let's not forget, putting this a little bit lower also, brings us exactly to a retest of the internal support at 4,480. Okay, so let's leave that for now where it was. And with the potential for a $150 intraday range, a sharp decline could follow any rejection at the 4,500. So rejection, stop hunts, and all the way down to 4,367 or so? Nobody knows. But the trade plan is to stay patient. Wait to see the 1 hour candles develop as they approach the 4,500 median band resistance. And if we see a clear rejection there, that is where the high probability short opportunity lies. Trade safe and watch out for tomorrow's data.